analysts anticipate that over 1 trillion naira in cash reserve requirements will be removed from the Nigeria's banking system as the Central Bank of Nigeria follows through on the 5% adjustment made on Tuesday. And I have Senator Audu, a Treasury team member at Access Bank. He joins me now to review activities in the market this week. Thank you so much for your time today, Senator. But it's been quite an eventful week we've had, you say.
Yes, thanks, Kenneth. Thanks for having me. So eventful, very eventful week. The week was kicked off by the meeting that the Monetary Policy Committee held on Monday and Tuesday. We saw the verdict of the committee released on Tuesday, where the two key events were the increase in the MPR, the monetary policy rate, from 14% to 15.5%, and the most surprising one, which was the increase in the CRR by 500 basis points from 27.5 to 32.5%. That information or verdict from the MPC largely spurred market activity that we witnessed through the week. The very next day, on Wednesday, we saw the DMO come into the market to conduct the NTB auction. As a result of that, the information or the decision of the MPC, we saw the stop rates across all three offers, the 91, 182, and 364-day bills, all rise. On the 91-day, we saw that increase from 5.5% to 6.49%. On the 182-day, we saw the increase from 6% to 7.5%. And the most pronounced increase was on the 364-day maturity. We saw that increase go from 9.75% to 12%. We've also seen that impact play out in the bond market for the on-the-run bonds, the 2025s, the 32s, and the 37s. We've seen all three bonds trade at higher levels than where they closed at the auction.
Well, I'd like to take you up on that second point there from the central bank, talking about the CRR debit, and I understand that we're expecting just about a trillion in terms of liquidity attraction in the markets today. And I'd like you to clarify that and what we can expect going forward.
So from the committee meeting, the MPC committee meeting on Tuesday, one key takeaway was the increase in CRR by 500 basis points. So effectively, what the CBN is to do is to debit the balance, the difference between the CRR requirements of 27.5% previously and now 32.5%. So banks have had to provide for that difference today. The debit is to happen today. So we would see that the actual figures come in today for different banks, depending on the current or the previous CRR balances that they had with the CBN before this increase. So we'll see that play out today.
But Senator, how is this going to affect how banks are more or less funding for today's retail FX auction then?
So definitely, because the banks expect that they will be debited for a substantial amount, it will hamper the ability of banks to go significant, to participate heavily at these auctions. But we understand the constraint that the CBN does face. The Monetary Policy Committee is charged with the responsibility of curbing inflation, and we've seen inflation rise to 20% levels. 20.52% were the last figures released. So we see the need for the CBN to at least come in and try to control this the inflation figures.
But Senator, very quickly, and I'd like a one-word answer for you because we're fast out of time, but do you think that we could see more pressures for the naira next week then?
Not necessarily. The CBN has made it a point of duty to manage those rates, so we don't expect any significant pressure on the naira, at least in the near term.